Hello, everyone, and welcome to our session on indirect cost rate proposals, how to apply and how to follow up. I probably get more questions about this than any other area of questions. I'm Paula McElwee, and I do the technical assistance and training for centers and Silks, but this is mostly around centers. If you are a Silk and you're wondering about whether you need an indirect cost rate, that is going to be a decision made by your DSE, your designated state entity, which in most states is the Department of Rehabilitation. But as you look at what you are and are not required to do, you're required to spread your indirect costs. I'll talk a little about that at the beginning of this proposal, but you don't have to do it using an indirect cost rate unless your state requires you to. So today we're mostly talking to Centers for Independent Living. Our goal is so that you can decide, are you properly applying your current indirect cost rate? What to do to apply for and report on your indirect cost rate, and to understand other policies and procedures that might be necessary to look at your indirect costs and to apply an indirect cost rate. So whether or not you have an approved cost allocation plan or an approved indirect cost rate, if you have more than one program or funding source or grant, you probably were required to submit that indirect cost rate proposal. So you're required to tell the feds what you're doing and how you're allocating your costs. The purpose is to make sure that each program or activity or funding source or grant, cost objective is the term in the law, that each one bears its own share of the shared administrative costs and not anything more. So the goal is that no grant wants to pay more than its share. Now, some of you had an option to look at the 10% rate without figuring your actual indirect costs. That is not what we recommend. We did talk about the 10% de minimis last month on this same call, and there's a link in this presentation for that specific call. And if you see the one that Sharon just posted on for this call, it's in that same page. So all of these calls are recorded on the same page. This one will be as well. But the other one is already there. So if you're doing a 10% de minimis, make sure you look at that, because the 10% is not a flat 10%. I told you all this last time, but I'm going to repeat it. Not a flat 10% against your costs. It is more complicated than that. And so you have to actually still calculate, and you can only do it against certain costs. So you want to look at that more closely if you've been applying a flat 10% as your administrative rate. What we want to do is make sure you have the proper indirect cost rate process, and that you're doing it in a way that's going to work for your organization. So if you only have one grant, nothing more, you might be exempt from having to do an indirect cost rate proposal. However, ACL, our funder, is telling us they still want to see an indirect cost rate proposal, because they want to make sure that your rate is reasonable. And if you haven't broken out your administrative costs, it's difficult to be able to tell that. And you are required to have all of your expenses be reasonable. So even if you have only one activity, you might be able to justify that you don't have to have an indirect cost rate proposal, but it is certainly your funder's preference that you still do. Now, organizations can allocate everything directly to each of their programs. It's an option, but you have to be able to prove it. So it's not much different from applying a proposal, because you still have to say how you're doing it. And then that's what a proposal is, right? If you're eligible for and do elect a 10% reimbursement for indirect costs, you don't have to have an indirect cost rate, but remember, it's not a flat 10%. And check in on that call if that's what you're doing. We suspect you may want to change that after you've taken a look at it. Okay, here's what an indirect cost rate proposal is. An indirect cost rate proposal is similar to a cost allocation plan. That's what we used to do. And that's what some of your departments of rehabilitation are still used to seeing, because that's what the Department of Rehabilitation Services Administration still uses as their indirect cost rate process. So you certainly can do a cost allocation plan and then do the next step, because an indirect cost rate proposal is really your cost allocation plan. Then you do the calculation to make it into a percentage. So it's the very same thing. It is actually a methodology. So you outline in your proposal what costs are classified as direct, what costs are classified as indirect, and how you're going to share them across your funding sources. Most CILs treat any general and administrative costs as indirect costs. You have some options about what you include, which is part of the confusion, right? If they would just tell you everything that has to be indirect and everything that has to be direct and how to calculate it, life would be simpler. But what the funders do, what the federal government does, is say to you, you figure out how you're going to calculate this and you tell us what you're doing, and then we'll check and make sure that you do what you said you were going to do. So when I say most CILs do it this way, it means you have some other options about what you do and don't include. Probably the best example of that is the executive director's salary. So some centers just say 100% of the executive director's salary is indirect. And you have the right to do that. And doing that keeps your executive director from having to do timesheets, which they don't like. So it gives you an option to treat 100% of it and not have to split out the costs. But the reality is that a lot of times the executive director is working on a specific program for a period of time. Might go to that office, might have a meeting at the Department of Rehabilitation about this funding for this program. And so they should be able to split out their time between what's specific to a grant and what is general and administrative over all the grants. So that's probably an example of something that's treated differently from one center to the next. And that's how you treat the time of your executive staff, most specifically the executive director, but sometimes some of your other administrative staff as well. So here's what you have to include in a proposal. So you're going to send this proposal to Health and Human Services, not to ACL, which is a subdivision of Health and Human Services. And I'll give you there is a link on where you send it in a minute, but it includes an introduction to your organization with background information, an explanation of how you allocate your costs, a general schedule of what federal funding you receive, a schedule of your payroll and related costs, a schedule of direct and indirect costs with a calculation, then the reconciliation of your financial statements or your 990. That's actually in your proposal. You have to do it again later. But in your proposal itself, you do a reconciliation and show that reconciliation between your financial statements and the 990. You have a certificate of accuracy of the information. So you have to sign that you agree that the information is accurate. And there's a lobbying cost certificate. Those are the pieces And we're going to tell you a little bit about how to do each one of those. When I say we, I'm including here Maria Stepanian. Maria is the executive director of a Center for Independent Living in Boulder, Colorado. She's also one of our team members for technical assistance. And sometimes if you ask me financial questions, I'll send you to her because she can break it down in a real functional way. So welcome, Maria, and feel free to jump in at any time. I'll kind of try to take the lead here, but we certainly are open to you jumping in at any time. Now, if any of you have questions that you would like to ask during the presentation, you can put those in the chat. I'm tracking that. You can raise your hand. It should show up and I should be able to allow you to talk at that point. Or you can hold the questions. We are recording and we'll be posting this part of the presentation. So if you have sensitive questions you want to ask, you can certainly hold them until after the recorded part. We will stop the recording before we start the further discussion. All right, here's how you submit your indirect cost rate proposal. You put together all those pieces that we just talked about, and then you send them electronically. If a file exceeds 25 megabytes, you may have to send it to them physically on some kind of another file. They will allow PDF files, but you can look at that. There's more at this link at the bottom of this slide. There's more information about how to do that. But make sure that your market proposal should contain all of the elements, including your transmittal letter, your certifications. There were 2 of those, remember. There are some checklists and supporting schedules that you'll find on this link page. And then a second file marked financial statements should contain that financial information, as well as an audited financial statement or your annual 990. So all of those records need to be included. Now, when you look at your first element that we had on that list of stuff to submit, just a second. I'm sorry, I had to clarify a captioning concern. I think we've got it taken care of, Sharon. But anyway, make sure that your first element, that first document we talked about in that list a couple of slides ago, is your introduction. Now, they don't tell you a set format for the introduction, but we feel like this covers all the bases, and we've seen a number of submitted and approved plans. So make sure that you cover all of these options. So make sure that you have your legal name in there. If you do business by another name, you need to include both. Where are you located? Your main business office location should be identified separately if you have more than one location. So make sure you identify where that is. Who you serve, the services you provide, the primary funding sources you receive, your legal structure and governance. Now, the law requires that you be a private, not-for-profit corporation, so that is your legal structure. You have a board of directors, so you will actually list those board members as part of this description of governance. The approximate size of your staff, that would be FTEs. So if you use a lot of part-time staff, which some centers do, then you want to translate that into FTEs. Whether you own or lease your facility and how big it is, how many square feet roughly that you have in physical space that you use. These are real specific items that they will circle back around to if you don't put it in there. So we suggest that you follow this introduction outline as you put your introduction together. Then you need to talk about how you allocate costs. Now, here's a sample for you. This made up Penn CIL, it's a made up center. Follows U.S. generally accepted accounting principles and uses the accrual basis of accounting. Now, your two options there are accrual or cash, and you all should know that. An accrual basis is what you should be using because that's what you have to use in your reporting for your federal funding. So if you're using a cash basis, we probably ought to talk about whether you really want to do that. A cash basis identifies everything the day it happens. An accrual basis makes it go back into the proper, what's the right word? Into the proper month of the year when it was happening. So I'm trying, Bethany, to make sure that you're spotlighted. Is that what I want to do? Hopefully I did that right. If I didn't, put something in the chat and tell me what to fix. All right, so accrual or cash is the first question that in that example, and make sure that if you're not doing accrual that we talk about it. And then your general approach is to allocate your costs to particular grants or contracts by doing this. First, anything that's allowable and direct, you charge directly to whatever grant it is, right? And then if it's an allowable direct cost benefit to more than one grant or more than one cost objective, you assign it directly to the grants that benefit based on the level of benefit that they receive. Now, what we're talking about, see, is allocation of costs. So your indirect costs have to be split or allocated. And here's what you do. Now, you can have a different plan than this one, but here is an example. And if you're comfortable with it and feel you can apply it, use this example. So your plan indicates what you use as your base. Most of the time it's salary because that's our biggest cost. And that's why keeping track of time across grants is so important for the people that work in more than one grant. And then everything else that doesn't fit on a salary basis, the costs that benefit the different grants are pooled or combined. So you can't figure out, okay, the bathroom rent, the portion of the building that's the bathrooms and the hallways and the lobby and the conference room, everybody shares that. Maybe I could assign the rent based on square footage for the actual offices, but what about all the rest? So that's a cost, right? Then you pool that cost, all your operations costs, the percentage of it that's not direct. You pool all that and then you split it out across your grants or cost objectives based on the direct costs for each cost objective. So it's a percentage that's applied to spread it back out across your costs. I hope that made sense. If it's not making sense, y'all, you need to drop a note in the chat and say so, please. So then we go on and have the information summarizes the procedures used, beginning on, you have a date, and when you began working on that particular approach, and then your payroll and related costs are documented on some kind of a report. So if you have payroll costs, now there are other ways to do this payroll costs, and I think Maria, I don't know if you'd like to jump in with another way to do this part of the cost. But while you're thinking about that, let me back up and answer the question that Monique had. So you've got indirect costs. Let me go back and look at those indirect costs on that prior slide again. So you've got your direct costs, if you have allowable direct costs that you know it was all for this grant and not any other grant. So your aging grant would be a good example of that if you had that, or a vaccine grant would be a good example of that if you had that. You knew what your direct costs were, including staff time for all the direct people. But what about your finance staff? And what about your HR services? And what about your executive director's time? Those costs are indirect, plus some of your building use might be indirect as well. It's up to you whether you include all those costs. You know, you get to decide how you deal with each of these costs. But our suggestion is that you take any of your other indirect costs and you put them together and then allocate them back out, split them back out. This would include things like your photocopier. Remember how we all used to, maybe some of you still do, keep track of how many copies each department made so you could charge it back appropriately. Well, if you put it in the pool, you don't have to do that. Office supplies, same thing. If you put it in the pool, you don't have to have them check out the office supplies and pay for it, you know, pad by pad for a specific grant. Instead, you put it in your pool or combined list of shared costs or indirect, allowable indirect costs. And then we're going to come up with a plan in a second for how you divide that pool back across your grants. But that is what your indirect cost rate proposal does, is tell you how you're going to do that. So hopefully that helps a little bit. Mona will get the calculation here in just a second. But you can certainly allocate rents. Some centers allocate all of it. Some centers split it out and do some direct and some indirect. You can do that if you define it in this plan, but only if you define it in the plan. So hopefully that makes sense. So if staff are working in more than one area, you need to document your time to say how much time you're spending in one grant and how much time you're spending in another grant. Now, this is allowed to be estimated, and you can try that. The regulations do allow that, and I think Maria was going to speak to that a little bit.
Hi, everyone. Maria Stepanyan here from CPWD. Just a quick intro. I am the executive director at CPWD, and I am a female with dark hair, and I'm wearing glasses with a virtual background of flowers and gardens. Now, about the time allocated, Paula, I think you probably want me to talk about the time study. Is that what you wanted me to? Okay. So one way we have decided to do for me as the executive director has been to track actual time for a period of time, like 6 months to a year. And then based on that actual, do a time study and then start using that estimate that the time study showed us, instead of continuously track actual time worked on each funding source. Now, that's okay if nothing changes, but if something else changes while you're using the estimates based on the time study, then you would do another time study. And we generally do once a year as a minimum for the time study, and also in those times that unexpected changes have happened and thrown my regular work differently.
Well said, Maria. So picture then, if you lose a grant or gain a grant, you may need to do the time study again to see how much time is being demanded from this new funding source, or how much time has been freed up and is being spent on the other projects because you lost a funding source. We all saw some of that changing during the whole COVID thing, right? We had the most of us had CARES Act money that we used in a certain way, but now that's all gone. So how we all spent our time in leadership shifted and changed, right? Because you no longer had that funding source to absorb that portion of the administrative or shared costs. So you can do a time study, you can do continual timekeeping. If you do a time study, or you can also do another kind of estimate if you can document how you did it. But you need to document what it is you're doing to track payroll and how you're doing it. You decide which method you use, but you need to be able to show what you're doing and why when you're reviewed. And I just want to mention this, we're getting a big increase in the number of centers being reviewed. Pre-COVID, we had, I think, 4 the year prior to COVID were reviewed. I know that there have been more than that reviewed already this year. The review includes your PPR, your program performance report. And then you're getting follow-up calls from your program officers at the federal level who are circling back around and asking you clarification questions on your PPR. And as a result of that, we're seeing then sometimes they'll drill down and ask for more information. So we are getting requests for these indirect cost rate proposals and evidence of how they're applied. So know that and be prepared for that, because they're getting a lot of reviews done. They're using a team of non-federal reviewers to assist them with some of this. So you might hear from a non-federal reviewer or from your program officer, but either way, reviews are happening. So be aware. You have to show them how you charge the salary and why. And then you take your payroll taxes and your fringe benefits, and you assign them the same way you do the salary and wages. So you've got anything else that is in there, the benefits themselves. And then the vacation, holiday, and sick pay assigned, same as salary and wages, you're doing them on payroll, right? So you assign them back out the same way you do the other salaries and wages. All right, so how you calculate the percentage to allocate those expenses has to do with how much time. I backed up a slide again. It has to do with how much time if you're doing it by salary. So if you're dividing out your indirect costs based on how much salary is spent in each one, you've got your direct salary expenses, and then you've got the rest, which fall into the indirect. And you're going to take those direct expenses, all your direct expenses, and you're going to say, okay, 50% of my direct expenses are my Title VII Part C grant. So 50% of all my indirect costs go back against that grant. And you have that kind of a calculation that tells you how you run the percentages back. We'll look at some charts here in just a second. Rent and utilities, as I said, usually you describe how you do it, but one way to do it is to have direct occupancy costs charged based on square footage used for that grant. And then everything else is administrative in general. The reason for doing it this way is that it lowers your indirect costs or your administrative cost rate because you're charging some directly as much as you can. The same was true with salaries. If you don't split out your executive director's salary to direct and indirect and you make it all indirect, then you're going to have a higher indirect rate. I knew one center whose indirect rate was over 50%. But they put 100% of their executive director and all their middle management staff into indirect. And so when you have that pool done that way, it's going to result in a higher cost than if you split out direct and indirect. Does that make sense? I hope. No, Monique's saying no, it doesn't make sense. What doesn't make sense, Monique?
That one there was a little confusing for me. So you said that they put all the management and ED salaries into.
That was their plan, right?
That was their plan?
Yeah, you don't have to do it that way. But they wrote a plan and they did it that way, and the result was a higher rate. Significantly higher rate, right? So you do your own plan about how you handle salary and how you handle rent and utilities. Let's look at this rent and utilities. If you put 100% of your building into indirect, then what's going to happen? You're going to have a higher indirect rate. But if you decide, oh no, we're going to base our occupancy costs are going to be charged based on the area that the grant uses, and they'll have a direct allocation for the offices for the people who work under that grant, that's going to lower your total indirect rate and allow you to charge more directly. But you get to decide your plan. And so you put in what you think is indirect, and everything else you divide out directly, and you make your own decision about how that works. That's part of what makes this whole thing confusing. I know it's easier if somebody just tells you to do it a certain way. But we do suggest you use this method. We've got it laid out for you. You can use this language if it makes sense to you. But if it doesn't make sense to you, let's change it to what does make sense to you, because we want it to work for your center. That makes sense? A little more sense? Okay. So as we said before, the executive director's time and salary and fringe costs can be both direct and indirect based on your record keeping. Same is true with program managers, receptionists, accounting staff. Some of that is going to be direct, maybe. Much of it is going to be indirect, if not all of some of the general and administrative salaries. That might all be indirect. And you want to be able to split it out so that each grant bears its fair share. Now, I know that what some centers have done is applied a specific line item to a specific grant and said, okay, Part C pays all the rent, but Part B pays all the utilities. Well, that's not really what they're looking to find. Now, we'll have a conversation at the end of this call. We'll have a little bit of a conversation around whether you can combine Part B and Part C. But generally, each grant is split out separately, and each one gets a percentage of those overall costs, charged back usually based on the salaries that are charged directly to that same grant. Now, just a rule of thumb, how to make your indirect cost rate process simpler. You can combine some categories. If you have an expense category that didn't even total $1,000 last year, do you want to combine it with other or with something similar so that you aren't trying to track that? Because in a minute, we're going to have a chart where you're going to put in your costs and your revenue. Well, fewer categories makes it easier. So you do want to look at your chart of accounts, and you do want to ask yourself, are there some categories that could be joined together? When you have multiple funders for the same program, that's where your Part B and Part C could be considered combined. In some states, it's used for exactly the same cost. That's not true in every state, but where it is true, then your Part B and your Part C could be combined as you look at this, and then split out. You know, if Part C is 75% and Part B is 25% of a total, then you split it out with that 75-25. I think maybe Stacy, did you have a question or a comment? So Era asked, are we required to treat rent and utilities in the same way, or can we charge back some of the rent as direct and all of the utilities as indirect? Typically, your utilities are part of your occupancy costs. There's that category. See, you can combine everything into occupancy costs that has to do with occupancy, rent and utilities and insurance, maybe. You know, but you get to decide how do you categorize your occupancy costs, and then you treat all of your occupancy costs the same way. So those other costs are treated the same way based on however you do your rent. typically you could not make one direct and one indirect. Do you agree with that, Maria?
This is Maria. Yes. Furthermore, you want to make sure that you're treating consistently the expenses. In other words, you have one way of treating it. So you would need to explain, why did you do the rent for that same space direct, but the utility indirect? Unless there is a really good explanation to it, it sounds to me that they're treated inconsistently. They're not treated the same way, because it seems like similar expense for that same space.
Right, and you don't want to change back and forth between what you do. That's another thing that I see sometimes that centers are doing that's going to get you in trouble if you're doing this. And that is that they can draw down the Part C money. It's easy. And so they draw down the Part C money for all their expenses for the first few months while they're getting their act together with the state, or the state's getting their act together with the Part B funding. And then you shift the expenses back the other direction. Well, you can't decide you're going to do it one way now and another way later. You have to do it consistently, as Maria said, all across the year. And so just because one of your funding sources is slower doesn't mean, oh, I get to draw down from this other funding source to pay for that until they catch up. You're not really supposed to do that. The exception may be an argument that could be made with Part B, Part C being the same funding source, the same cost objective. It's not the same funding source, but same cost objective. And ACL has not at this point accepted that argument. I'm still arguing it, but they haven't come through to say, yes, we can combine them. Okay. Your state might have some other rules. They're allowed to do that with Part B. They can add requirements, not with Part C unless you're in Massachusetts or Minnesota. But with Part B, they can add other regulations. So then you're going to put a schedule together. You're going to actually have a chart. You can use this one or create your own. That's going to tell your money, what the grant number is on it, how much it was, how much you spent, what the performance period is. And you're going to do this for all of your main grants. Now, notice we've got one here, Department of Labor, New York State, $150,000, and we marked it as pass-through. I'm going to tell you in a minute what to do with pass-through, but pass-through funds are funds that didn't really come to your center. So you don't really charge indirect costs because you're just passing the money on. One example would be if you manage a Section 8 existing housing program. So people come in and they apply, and that's all part of independent living, but the actual management of that program, it's passed through to them. They're the ones who get the rent, they and the landlord. Same thing could be true of other funds. If you operate a personal attendant service, paying those attendants is passed through. It's not actually income to the organization, and you shouldn't have to charge indirect costs against pass-through funds, because the purpose is to put them in someone else's hands, not doesn't have indirect costs. So if a grant is really small, typically I see 10,000 or less. Sometimes you get 500 here and 2,500 there and so forth. You can combine them into something called local grants into one column and total the amount with rather than having a really long list on that chart, because it may make more sense to do it that way without, and then you can charge your indirect back. The funds are generated for the consumer and pass through to them, like the ones we just mentioned. Like home modifications is another example. Food bank, transportation, you don't have to include them in indirect costs. But if your funding source says you can't charge administrative costs to this grant, or you can only charge 10% or whatever. That doesn't mean you don't have to apply those costs to each and every one of your grants. Remember that word consistency that Maria mentioned a minute ago? They expect to see that same consistency as you apply. Ask for a schedule of payroll and related expenses. Did I?
Paula,
Yeah, somebody.
we lost you. Can you repeat the last couple of sentences?
Now, can you hear me now?
Yes.
Okay. So on this next schedule, what you have is payroll costs. And you take your staff name and position and their salary and how much of it's charged where. And this gives you an example of how you're projecting your payroll and your overhead or indirect allocation for each one of those. Now, this is projecting it for the future. And some of what you've been listing for them is past. So you may not have agreement between what it was last year and what you expect it to be next year. So don't get yourself too wrapped up in that. If just read which one it's supposed to be, see the word projected payroll. This is projected. Some of the others have been reconciliations of actual past stuff. So, and then you've got your all your costs included there. And then here's the calculation itself. You put your indirect costs, write them down. Your actual direct costs, write them down. Figure out the ratio between the two, and that is your indirect cost rate. Now that indirect cost rate, to apply it, do you know what you're supposed to do to apply it? Because I've had people who call me and say, well, I have an approved indirect cost rate, but I've never applied it because I don't know how to apply it. And we'll talk a little bit more about that when we stop the recording here in just a second. But to apply it, you have to do whatever it was you said you would do in your proposal. Because your proposal, remember, is a methodology for how to apply the rate. You come up with the rate and then you apply it. Now they require some reporting on that, and we don't have time to get into that in depth, but that's the process. So we talked about a timesheet. I'm just going to flip through that and go to the questions and answers. I do want to say this part before while you're putting your questions in the chat or raising your hands if you have questions on this so far. Remember, your actual rate may be different than what you said, what you projected. That's why you got an approval for the formula or the methodology for a provisional and not a final rate. So most of you on your certificate, it says provisional. And then from time to time, you'll get a letter and they'll say, show us your reconciliation of your actual to your provisional. And you send them that information and then they approve a new rate. So this is actually going to be done on a regular basis. A final rate can be used to determine if you overbilled or underbilled. Most of the time, they're not requiring any payback. They're also not offering any. If it was off, but what they're doing is adjusting the coming year. So they adjust the next year as you go forward. But don't worry about the fact that what your actual indirect costs add up to be will be somewhat different from this percentage, because they're going to help you reconcile that at the end of each year. So just know that. Also, I guess, pay attention to any mail you get from these folks. And if it's going to somebody that was in your position in the past, you need to make sure that you're getting it, because they do on a regular basis ask for reports, ask you to recalculate your rate and resubmit. And then they continually adjust it. So it goes on and on and on. Your indirect cost rate is never over. So keep that in mind as well. You cannot bill more than your approved rate. We suggest you don't bill less than your approved rate unless some significant change causes you to you're going to have to reduce it, and you don't want to overbill, and so you want to repay that or whatever. You don't want to deal with that. You might bill for less. Never bill for more. You can't. Can bill for less, but think about it before you do. You can only ask one time for a specific cost to be paid with your grant. So you have to show what costs are direct and what costs are indirect. And if you have indirect, you can't put it in your reimbursement request. You take out the cost and you put in the percentage. Now, I want you to hear what I said. So when you have your indirect costs identified, you cannot charge them directly to your grant. So your rent has, this much goes to Part C, this much goes to pre-ets, this much goes to housing, and this much goes to indirect. But you can't charge that amount to indirect. What you charge to indirect is your percentage, which should be very close to the same. And as I said, you'll justify it at the end of the year. But hopefully that helps you to think about it. So you can't charge twice. So there were, I hope not very many, but I know of 2 centers that took the 10% de minimis rate, charged all of their costs directly, plus charged a 10% de minimis. Well, that's charging twice for your indirect costs, and that's not allowed. There's some more information on how to actually keep this information, but we're running out of time for questions. So I'm going to stop sharing for now. You'll find the rest of the presentation is posted. But let's see what questions y'all have. I'm going to stop that recording.